and stop Iranian oil from coming into the market, that will come through back door. But basically we have a situation where there is a surplus of crude oil, and crude oil, as was pointed out earlier, looks like WTI trading in a range of about $60 to $68, and Brent trading between say $65 and $70. So with that, the pogo is going to be enormous, and that is why it is even more urgent that Indonesia applies its mind towards how to fund the program. We also have a problem in Indonesia of too much refining capacity. Old-timers like me remember the late 80s and early 90s in Malaysia, where refiner after refiner was going bust because too many refiners were chasing the handful of plantations who had CPO. CPO was like gold dust. After many years, there was a shakeout, the refining capacity subsided, and refining became profitable. We are now seeing a similar situation in Indonesia. And we have got to ensure that we do not expand recklessly in refining, or for that matter, even in oleochemicals. Now, very quickly to other oilseeds. Rapeseed is bullish despite the threat of the anti-dumping duty from China. European and Canadian rapeseed crops are lower, and thanks to NAFTA, the demand for canola oil for renewable diesel in USA is very strong. It's too early to discuss the Indian mustard crop. Soya, massive 2024 crops in Brazil and Argentina, followed by a big US crop. But I would not count my chickens for South America, particularly Argentina. Planting has just started. We still have to wait before we conclude that there are going to be big crops from both Brazil and Argentina. In the meantime, the demand for soya oil from Argentina and Brazil has been fantastic. The Indians every night are buying March, April, May, which is at a discount, that position. 500,000 tons of oil must have traded to India by now. Sunseed, I have already covered that there is a shortfall of 7 to 8 million tons this year, and for sure after Jan we will see tightness and higher prices for sun oil. China, in my opinion, is still taking time to grow faster. There is the anti-dumping investigation against canola, and I wrote this paper on the 3rd of November and I did not know who the President of the United States was going to be. But other speakers have discussed what is likely to happen from January. Almost certainly there will be a spat with China. You see, there are certain things which are universally popular in America. China bashing is one of them. Mexico bashing is another. So these popular causes almost certainly Mr. Trump will take up. And we will have to see. So far, soybeans in Chicago have not broken. In fact, they have rallied, recovered. Ultimately, it's a zero-sum game. China will buy from South America. Europe will buy from USA. USA will increase the crush. They will export soybean oil to India. It could all happen. But it takes time to fall into place. We have to watch. India, bright spot for demand. Indian consumption and demand look very good. The big question is this import duty hike of 20% which India brought in on the 13th of September. It was a political move to take care of a certain state election. That state election will be over by the end of November. Most of us feel that once the political objective is achieved, the Indian government will withdraw the import enhancement of the import duty. It makes sense because India also has a problem of inflation and veg oil prices are very high. And you know what happens in the market when India reduces its duty or withdraws its duty. So be careful. Now, quick projections of India's imports. This year, this oil year, November to October, India imported 16 million tons. And I have deliberately put the figures of 12-13 to show you how much market share palm is losing and how much market share soya and sun are gaining. In 12-13, 10 years ago, India imported 1 million tons of soya and less than 1 million tons of palm. For next year, I am projecting India will import 4.5 million tons of soya, 3 million tons of sun, and 8.5 million tons of palm, the same as 10 years ago. And India's imports will be roughly 16 million tons. There will be no growth because prices are high. And secondly, India has got good crops and large stocks. How India manages to crush those seeds, we will have to see. Now, very quickly, world energy demand normally increases by 3.5 million tons every year. That means for biofuels. This year, I think it will increase by 4 million tons because of the bigger mandate in Brazil, in Indonesia, and also in the US. Food demand normally increases by 3 million tons. I expect next year it will increase by only 2.5 million because of high prices. So net 24-25, world demand will increase by 4 plus 2.5, 6.5 million tons. Now, my method is to look at incremental demand and supply. So look at the incremental supply. Incremental supply in 24-25 will be soya oil, 3.5 million tons. Rape oil will be down 1 million tons. Palm oil I am expecting will be up 2.5 million tons between Malaysia, Indonesia, Thailand. And sun oil will be down by up to 2 million tons, which is in the others category. So total supply increases by 3 million tons. But demand is going to increase by 6.5 million tons. So straight away we are starting with a negative balance sheet. Last year we had high prices, but the supply-demand fundamentals were in balance. Supply was up by 7, demand was up by 6.5. But next year looks alarming. And that is what I am saying, that the funds took the market in a certain direction and the fundamentals coincidentally followed the funds in the same direction. The price outlook factors are the deficit in the incremental SNDs, the new biofuel mandates, weather in South America, the trajectory of the dollar, crude oil prices, capricious climate, and India reducing the import duty once again. If that happens, I expect palm futures on the BMD to trade above and around 5,000 ringgits between now and June, based on today's fundamentals. But Jan-March could be higher. That is the most bullish period in the market. However, if any weather problems happen in South America or anywhere else, prices can go much higher and may lead to the suspension of biodiesel mandates in some country or the other. Biodiesel mandates can be suspended in USA, in Brazil, wherever. I am not only talking of Indonesia. I also expect that CBOT soya futures will continue to benefit from the brisk US biodiesel demand and also the change from blenders credit to producers credit. If there is any announcement of a new project for sustainable aircraft fuel, that will be a bullish factor. And remember, in 2025, there will be no excess sun oil to put pressure on the market as it was last year. Lauric oils, very simple, coconut oil is now in a downtrend. Prices should be between 1,800 and 2,000 from now until June. I believe CPKO prices in Malaysia today crossed 500 per pickle. So it's a very strong signal. My conclusions: capricious climate is with us again. Funds have guessed the price outlook much better than the fundamental players. And the question is, will good growing weather of 2024 continue in 2025? And the only person who can help you is God. And that is why I am telling you good luck and God bless.